IT software and services is a pretty small part of the overall IT sector in Asia, given the dominance of semiconductor and tech hardware companies in markets such as Korea and Taiwan. But it would be foolish to ignore it, as the sector can offer investors an interesting mix of resilient and cash-generative IT services companies in India, as well as more growth-oriented software plays in China and Australia. The IT services sector in India has been around for decades, and yet companies remain as relevant as ever. The fact that these companies are technology agnostic and become partners with the world's largest companies to help them reduce cost, transition to the cloud, and become more digital has meant that these have been able to ride several waves of technological innovation. These companies are not tied to a particular product, but operate more like consulting businesses with a sticky customer base. Aside from offering double-digit earnings growth, IT services companies are CapEx light, sit on healthy net cash balance sheets, and typically return most of their free cash flow back to shareholders via dividends and buybacks. The highest quality companies in this space have been truly fantastic businesses to own, and we still think there is good reason to own them in a balanced portfolio, given the attractive structural drivers for growth. We also see these companies as creating positive impact on societies via the modernization of enterprises. At the other end of the spectrum, you have more pure-play software companies emerging in China. These companies have a huge addressable market and are benefiting from strong localization trends and rising IT software spend. As China looks to wean itself off reliance on Western technology, we expect local software companies to gain market share, particularly in areas such as cybersecurity, but also in traditional enterprise software. Many of these companies are still investing 20% or more of their sales into research and development. But as they gain scale and dilute their fixed costs, we should see profit margins stabilize at higher levels and national champions emerge. As active managers, our job is to identify which of these companies stand to benefit the most and are worthy investments of our clients' capital over the long term. We remain upbeat about the sector's potential in Asia.